All right, let's see. We got this up and running. Good, we look good there. And we got this. Let's get that one too. So, hey everybody, TG Watkins here. It is November 12th, already into November. Well, Cat wants to say hi here this morning, so we'll see how that goes. All right, so we're into the new month, and then we have FOMC today. So that's really the big deal is FOMC. Thanks, Mike. Sounds like we're good on YouTube. We'll see about Facebook too. All right, and really, so everybody's waiting for that. The market is extremely quiet today, not a whole lot going on. But yeah, if you guys have any questions, come over here, profitpilot.com. You can check me out there. Also, any of the simpler trading pages. So let's pull up the market, kind of see what's going on. Maybe we'll take a quick look at the internals. Yep, slightly negative. So that's kind of expected. The thing I've been talking about all week, even though it's just Wednesday. So Monday, Tuesday is that the market's been very, very high. It's really elevated, and it basically everything I see says that there should be a pullback, and we've been getting that today and yesterday. So yesterday was kind of an interesting situation because we actually opened up with a fairly strong move up, a nice gap up there, but it got sold into right away despite the internals actually looking pretty good. Yesterday, I think it opened up 10-to-1 buying volume, and then it closed the day, I think, about 2-to-1. So a lot of that buying strength had just bled off, and you could see that the market just kind of went down all day long. And if we look at this more closely, on the 15-minute time frame, you could see, a nice big gap up here. It just didn't work. And then it continued to bleed down here. It cut through the 15-minute 50, found some support, and then just bear flagged sideways until it ran into the underside of a downtrending 15-minute 50. So, there could have been some trades in here, but really, the only thing you could do is maybe like sell some premium under here. So that's about it. And you could just see price ran right into the underside of the 15-minute 50. Notice that the Moxie indicator has been very tight, so strong in that direction and in the downward direction. So we were seeing that happening there. And if we zoom out a little bit, we can see that there was some negative divergence. It first started with just kind of coasting. You can see price going higher, the Moxie indicator just kind of staying there. But then we noticed this last thrust, price moved up, Moxie indicator really down. And that was the bigger form of negative divergence. Hey, John Watkins, good to meet you. So yeah, what part of the country are you in? So we got that, and then for the SPY, I've been looking at price getting underneath the hourly 50. That's happening. Now the question is just how far are we going to go? Like how far is this pullback going to persist? That we don't know. I have been looking at generally price somewhere under here underneath the hourly 50, but above the hourly 200. I figure, I just kind of my assumption. We'll see how this actually pans out, but my assumption is probably I'll call it 377, and that's mostly because the daily 21 is right there. We shall see. Now, we don't know the path of how this can go. We have the FOMC today. They are expecting a 75 basis point rate hike, but then it's going to be about what is the report, like what's the narrative, what words have changed in their messaging, and then what about the Q&A session that Jerome Powell is going to have later. So, the market's going to be doing like nothing now, but then a whole lot of stuff later towards the end of the day when all that information comes out. A couple paths. One, this could be all that we have. This is all the bounce that we have, and then from here we're gonna bump around and we're gonna just start heading back down. Totally a possibility. If we're bullish, well, I'd like to see a little bit more of a pullback before we move up. We'll have to see how that happens. Some people have been talking about 400, and then others have been talking about 410 because that's about where the daily 200 is. We'll have to see if that happens. And then, or we could actually just chop around here for a while. Let me just bring up 2008. I've been using this as a pretty good reference because 2008 has been a very good analog for 2022. It's been pretty incredible how much this is lined up. And what you can see here, right in that area that I circled, you can see that what did price do? It initially ran into or just beyond the daily 50, and then it pulled back, and then it tried to go higher, but essentially it was a double top. So this is my point, that we need to be prepared for any path that the market wants to go. We could actually just be in a whole lot of chop, And you could see this, just a whole lot of chop as price was basically dealing with or interacting with its daily 50. Okay, so that could just be what we get. We got the 75 basis point rate hike. Now we have to figure out, okay, is the Fed still going to be really hawkish? Are they going to be dovish? Are they going to be like, well, we're going to wait and see? And you know what? What we have next week is we have CPI on the 10th, so next Thursday. So let's just again, just kind of putting some things together. Let's say we are right about here currently. And so we get the FOMC and we pull back the way that I'm looking for. I'm looking for a little bit more of a pullback. Now let's just say the market kind of says, okay, well, I'm not falling apart. And let's kind of see what's happening, and maybe we kind of can move up a little bit, because maybe the market is thinking that CPI is going to be cool or coming down or something like that. Maybe that's going to be good news. So then maybe a few days later, CPI comes out and it's not good. Maybe it's not peaking out. Maybe it hasn't gone crazy, but it's sticking. Like inflation's still just not coming down. It's just sticking around. And so then maybe that's going to be the next thing that rolls the market over. So just to make sure we put it out there, put it in our brains, think about what's going on here, that even though people are talking about daily 200 as a possible target for the market, and, okay, fine, it's possible. It's possible. But we also need to be prepared that we could also just get a whole bunch of that from one news event to the next news event, okay? So I think that is a decent thing to think about, because if we look, and all my tabs are screwed up for now. I have to memorize where they are until I restart my computer. But just imagine, we're right there. We are right there dealing with the daily 50 on the S&P. And so you know what? We can get down. We can kind of chop around a little bit. We can try and move up again. And maybe we get up here and then CPI comes out and it trashes the market again. Totally possible, okay? We just don't really know yet how the market's going to go. And I want to make sure that we are all prepared for the market just not being awesome in case that happens. Now, the other thing I've been looking at is the Dow. And let me come over here, get the other screen. And the thing about the Dow is this area from August looks exactly like what we were dealing with right now. The daily chart looks exactly the same. The hourly chart looks exactly the same. Even the 15-minute time frame looks the same. I mean, it's pretty crazy how this is looking. So the only difference I've seen is what the hourly Moxie indicator is doing. This one has actually been pretty good, moving up like that. The one leading into this had negative divergence going into it. So yeah, we got that. But for now, you can see that price is getting stuck underneath the 15-minute 50, and the Moxie indicator is below zero, and there's still a gap here between price and the hourly 50, and there's still a gap here between price and the AEMA. So the Dow is telling me that the market needs to pull back more. And so obviously, if the Dow is going to pull back, the SPY is going to pull back, but they're going to do it proportionally. They're going to do it within the ratios that they are. If the Dow on a good day, in this case, goes up 10 points, well, the SPY might go up 3 points, and in this, the IWM has gone up, 6 points, and the NASDAQ gone up 1 point, so they're all going to move proportionally. So if the Dow pulls back 10, maybe the S&P is going to pull back 3, same thing like that. So that's what I'm seeing. Dow is still super, super overbought. And the IWM, the Moxie traders and I were discussing this one yesterday. And I was talking about some of my particular patterns. I've been dabbling with the duckbill, the new pattern I'm trying to work on, the duckbill. And it worked. I mean, look at that. So anybody over there in Moxie land, we were discussing that. And I said, hey, usually the thing I see after that duckbill situation is that's kind of been a forced or stretched move. And whenever that kind of just runs out of energy, boom, we get a move to the downside. And that's exactly what we got today. So that timing was pretty good. And you can see right here, broke off of the 15-minute 50. And obviously the Moxie indicator was down, trending down, and looking pretty weak. So, but same thing, just really elevated pullbacks look like they need to happen, and they are happening. So that's why I'm like, we'll have to see what the market wants to do with this news, but right now it doesn't look like it wants to do much buying, but that could also be people just taking chips off the table until we hear the news. So that's kind of what I'm thinking through there. The UVXY has been interesting, and I know a few of the Moxie traders took a nibble on this one yesterday, mostly just because it's so low. Like, it's so low that it would the risk to reward is pretty good in your favor, that even if you just took a swing at it, it's likely to if we're wrong, it's not going to go down too much, mostly because it's just so far down and the market's so high. So really, I'm seeing that there should be a bit of a shift in this direction. We can see here that the daily chart has hit the lower third ATR. It's off of the 8 EMA, so it's very oversold. And you can see the same thing here, that there's a huge gap between price and the hourly 50, and same thing. It needs to get back closer to its moving averages. This is just very far away. And so what do we get? When you get price too far away from the moving averages, it either wants to fix it by time, flagging, or if it wants to actually fix it by price movement, and that means it wants to get closer. It's going to actually make a move to get closer to those moving averages. And so that's kind of what I'm seeing is a general opportunity for a snapback to their respective moving averages. UVXY up, Dow, SPY, IWM down, that kind of stuff. And we're just now starting to see the difference. We have the UVXY actually starting to cross over the 15-minute 50. That has not happened, in this recent downtrend of, I don't know, 6 days or something like that. The other thing is we're seeing the Moxie indicator above 0. So now this isn't a swing trade. This isn't like the next new, upside run for UVXY. This is merely a very, very oversold situation that it looks like we should get, I don't know, a couple day pop in the opposite direction. And we're seeing clues and indications that that pop is starting to happen, and also that we should be seeing then, conversely, we should be seeing the SPY, the Dow, the major indices down. So that's what we're looking through. And yeah, let's see. Okay. Yeah, so John, market's at an interesting point before the FOMC. We had a huge run up into the FOMC, basically. But then, energy momentum kind of ran out because, well, number one, it really got overbought. I mean, even just from technical levels, it got overbought. And then also, I think a lot of people knew that the FOMC is coming. So, you're not going to place huge bets just right into that. Or if you do, you're kind of expecting that it's going to get crazy on the FOMC day, so you're going to probably take off some of those bets. So I think that's why it's happening. Yeah, topspin, totally. Yeah, we'll have to see what happens with FOMC. All right, Mike, 10-year rates hold the key of this market. What does the longer term view of the US 10-year look like? Well, would the TNX and the TLT work for you? Because that's really what we've been reading. And if we come over here on the daily and the hourly chart, what I have been working through is, again, with these similarities, seeing a lot of similarities. So like the Dow from August to now looks exactly the same, and just from price patterns and formats. The TNX from May happens to be looking very, very similar to right now. And what I'm noticing there is that there's a large distance between price and the daily 50, and it pulled back to it. And what I'm noticing now is there's a large distance between price and the daily 50, and I feel like it's in the mode of wanting to pull back to the 50. Now, what did that look like back then on the lower time frame? Notice here, price got underneath the hourly 50, Moxie indicator below 0. What do we have currently right now? Price at the underside of a downtrending hourly 50 with the Moxie indicator below 0. So, not saying that it has to happen, of course, because the market can do whatever it wants, but if we're going to try and have any consistency in how these things work and how they move and something we can rely on, I mean, I'm just pointing out that those two scenarios look exactly the same. And so I would be willing to place my bet and say that it seems to me that price is probably going to move down from this point on the TNX. So TLT up, TNX down. And so that's generally what I'm seeing. Now, doesn't have to happen, of course. We have the FOMC today. Different things can come around. But if I were just looking at the charts, that's what it's communicating to me. The other thing that I think is interesting, I was communicating to the Moxie traders about this yesterday, is that I think I see that the market needs to come down a little bit more, but maybe that's going to be a bullish pullback. Maybe that pullback is actually going to come into some support and then have the market move up. That would, in one way or another, jive correctly with the TNX. If the TNX comes down and the TLT comes up, that's good for the market. So we should, if TNX come down to the daily 50, we should see a little bit more strength in the market. We'll just have to see what kind of steps it can do and if they're going to be directly correlated. So that is one thing I'm seeing through there. TLT, you'll see basically the same thing right here. I mean, this looks like a nice bullish pattern. There's your Moxie price trigger, and now we have price holding the hourly 50. Same thing, just upside down. So yeah, it looks like that. And then how about the UUP? And yeah, so in through here, the same thing. I was talking about how there was a large gap between price and the daily 50, pulled back to it. Large gap between price and the daily 50, pulled back to it. We had a large gap between price and the daily 50, pulled back to it. So there you go. Now, the question is, and maybe the wrench in the system is, okay, well, it pulled back to the daily 50 just like it's done, several times before. And now the third time, even, back here, you could say the fourth time. Each time that area held for a bullish scenario. So now we have to ask ourselves, well, is it going to keep holding? Is this going to, find some support here and keep moving up? Well, for the most part, I'd say we should be prepared for that because, an object in motion will stay in motion. But the only thing I'm going to say is I don't quite see it yet because right now we kind of have the price in the middle ground. Price is over a downtrending hourly 50 and the Moxie indicator is below zero. Technically for me, that is an inverse trampoline move. Price should not be over the 50 if the Moxie indicator is below zero. Just like this. Price should not be over the 50 if the Moxie indicator is below zero. And so for now, I would like to say we should probably expect some lower prices on the dollar, the UUP. But since this is such a macro thing, I have been very cautious about really pounding the table about this and being too stringent on this, mostly because there are just bigger macro forces at play here. But I don't quite see an up move yet. So, maybe it could even just, even if it pulled back here, did a double bottom, that would give some divergence. And then if it wanted to go up again, that would satisfy that. So right now, I would lean towards the dollar, probably want to go down a little bit further. But I think we should also be cautious about that. And I would say be wary of bottoming patterns or some sort of configuration that would help get this thing higher. So just that's kind of what I'm seeing there. Yeah, John, exactly. It looks like it wants to roll over, but of course it's going to be data driven, CPI and all that. That's why I'm not being too firm about my reading and interpretation of this because there are just such bigger forces here at play. Now, what I can show you is, like here's the cursor. This is from the last time that price bounced off the daily 50. What did we see? Remember, here I just pointed out an inverse trampoline move. Price should not be over the 50 if the Moxie indicator is below zero. Notice, same thing. Does that look exactly the same? It does to me. Price is over the 50, over a downtrending 50. Moxie indicator was below zero. That's an inverse trampoline move. And what happened? Price went down further. But then, as I cautioned, it is dealing with the daily 50, which is still in an uptrend. And so we need to be watching out for signs of a bottoming pattern. And what that was is price lower, Moxie indicator higher. There's your positive divergence. And then you could see price got over the hourly 50, Moxie indicator fired, and it continued to follow the hourly 50 in that regard, and Moxie indicator was looking strong. So that's how you blend the hourly time frame with the daily time frame and say, well, yes, the next nearest step I see should probably be down. However, that is down into an uptrend on a higher time frame. So hopefully you guys can kind of make sense of those two different thoughts that we kind of need to keep in mind at the same time. And then how about the last time? How about this one? So, initially your first move right there, price over a downtrending hourly 50 with the Moxie indicator below zero. Yes, that's an inverse trampoline move. Price should move lower. And it did just a little bit. But then, hammered out a bottom. It bounced off of the daily 50. The Moxie indicator kept screaming higher every single day, higher, higher, higher. And then what happened? Right there, you can see price engaged with and followed the hourly 50, and that confirmed the resumption of the uptrend. And so that's what I mean. That's why I think we're saying the same thing, that right now, yeah, doesn't look like it's ready to go higher. Maybe there's another little dip, but until really proven otherwise, we need to kind of think that maybe this is just a bottoming pattern. So yes, it can go a little bit lower over the next day or two or three or whatever, but then be aware maybe it's gonna find a low and start to move back up according to the daily time frame. All right, so generally stuff like that. Let's talk about GDX. I know this is one that's been getting some attention. And for now, it does look like it wants to go higher, but again, this is going to be based on like, what's the dollar going to do? You know, if the dollar continues its uptrend, well, it's going to be really hard for gold or GDX to make an up move. For now, it does look fairly constructive to the upside. You do have the 8 over the 21. You do have the Moxie indicator above 0, and you have price over and staying over the daily 50. I mean, this looks like it wants to start holding and making a move to the upside. On the hourly chart, the hourly 200, which is the orangey color line, which was kind of in a downtrend, went flat, and now it could just be starting to be angled up, and we have the 50 over the 200. So we have the change of trend possibly starting. And if this continues to work out, we have a trampoline move right here. So price below the 50, but the Moxie indicator above 0. And if it can generally hold in through here and then start to move back up again, then it seems like there should be more upside potential in this. But it's going to matter on, you know, Fed, FOMC, interest rates. It's going to be challenging. You know, gold specifically, it does not trade in a vacuum, and so we have to take into account these larger forces. So sitting on my hands today, we're going to see where things go. I see potential, but we need to have that potential actually confirm. I'm not just going to be saying, oh yeah, this should go, but you know, if something else based on the Fed and interest rates and whatever, if that changes, it's going to change this, and you know that it's just going to affect it. So we need to be a little bit sensitive to everything else, all the other moving parts that are out there. All right, well, I'm going to be pretty much wrapping it up there, mostly because we have the FOMC today. Market's just kind of hanging out, not doing too much. Down a little bit, that's been expected. Mostly people kind of removing their bets from the news report. And we will see in a few hours what the market wants to do and if we can actually determine anything, because a lot of times, you know, for the first hour, it's just all over the place. So let's check it out. John, yeah, all right, man. I guess we'll see you at the next one.